actually think what's happened is we had a fall last year, we've had a strong rebound this year, and now what I anticipate is we're going to go to a more normal level of growth. So thinking around 6 to 7% dividend growth into 2022.
How important have the banks and the financials been in this contribution to the quarter, given that we know that they were advised to suspend dividend payouts during the heat of the COVID crisis?
Yeah, the banks have been a really key contributor during this quarter, and the fact that into the fourth quarter as well, we're starting to see some regular payments resuming. We're seeing some special dividends, and also we're seeing some share buybacks. So actually the banking sector in its entirety has actually rebounded very strongly after the suspension of dividends, albeit we're not going to get back to pre-pandemic levels, but the dividend outlook in the financial sector is looking very good.
Jane, what about the mining sector? We know it's been a fairly strong run. There's been a lot of demand for certain commodities at this stage, but we still don't know what the pandemic trends look like at this point. And we feel like we might see a ramp up in some areas. I mean, copper's been called as a play on EVs and the transition for the future. What do you see for mining, and will it still be a supportive factor on dividends, do you think, in coming quarters?
So we've seen a huge rebound in mining dividends, absolute phenomenal level of payouts because they've had such incredible profits this year. I think looking forward, clearly it's the underlying commodity prices are going to be absolutely critical. We've seen quite a sharp correction in iron ore already, so there's a headwind there for some of those companies more exposed to the iron ore cycle. But as you all pointed out, there's other commodities that are continuing to do very well. So it's going to be mixed. I think from here, it's going to be harder for them to grow. They can't grow at this same level they've just exhibited. So it's going to be a little bit more challenging into next year. The thing as well is that a lot of the mining companies have moved to fixed payout ratios, so they will pay out a fixed element of their profits. So if their profits fall a bit, their dividends will fall. But we're very aware of that. And so I do think next year it's going to be a bit more of a challenge for that mining sector.
Jane, can I ask you more broadly too about dividend chasing at an index level, because we have seen momentum in the UK stock market finally, in the FTSE 100 above the 7,300 point mark. To what extent do you think those who are looking for income and dividends are now chasing the FTSE 100 once again?
The FTSE is one of the better yielding markets globally. It's yielding around 3.5%-ish versus the global world is about only 1.8% on dividend yield. So the yield available in the UK is very attractive. And I think we've just got to remember that it was very much hit last year. All those high yielding countries such as the UK, Australia, France, parts of Europe saw dividends very much slashed. So we're seeing a strong rebound, and we now expect growth to be more pedestrian but really sustained. So growth next year in the UK, pretty dull, flattish on dividends, but still giving us a nice yield of around 3.5%.